There are three categorization of how businesses can support funding. You mentioned about loans, equity funding, and the other one was a self-funding sort of thing. So it's not really about loans all along. There are other options of financing and also some weighing factor to determine which one is best for business owner to take lah.
Yep. There was a call I received lah. I think it was like almost midnight. Okay, and then one of my clients called and said, "Look, I need to talk to you because I just received information that one of my rented units is actually being sold." One of the landlords called me lah to tell me, because that person was quite okay with this client. So that landlord actually tell the client, "Look, most likely after this unit is sold, you will lose the place. Because the person who actually wants to buy over the place is doing the same business as you."
Small business owners often face challenges in order for them to grow. It is not easy for an individual out there to get a proper advice, and even so there are advices, it might either be the wrong one or the one without proper hands-on experience on the field itself. Hi, I'm Humaira from Accounting Superhero. Me and my team handle sales and client success work for our clients both in Malaysia and in Singapore. Every week, I will book a one-to-one session with Mr. Faz, who is my boss, for me to get a bit of mentoring from him for me to perform better in my role. Join me as I go through various topics with him relevant to business owners like yourself who are keen to grow and go to the next level. But before that, I would like to just put a bit of a disclaimer in which whatever will be shared by Mr. Faz will be based on his real-life experience as a chartered accountant in the industry for more than 20 years. Just so you know, Mr. Faz is a no-bullshit kind of person. You ready? Let's go!
Hi, good afternoon, Mr. Faz.
Hi Humaira, how are you?
Good.
Alhamdulillah.
Yeah. Right. So, I'm seeing you today, of course, with another question. Because I've been seeing clients in my daily basis, and some of them come and ask about things like funding, if we do it and if we are able to assist them with it. It's something that I have yet to secure full knowledge of. So I'm seeing you today just for me to get to know a bit of how this funding works for business owners lah.
Okay, sure.
Yeah.
So when you say funding, you mean they are looking to get some money for the business lah, get some funds for the business. Carry on. Okay, interesting. Can. So there are many things that can be done for a business that wants to actually get funding. I think there are many options as well. There's some good and some bad in that sense. Pros and cons. And of course, usually people think of bank loans lah, but there are also other alternatives. I think I can give you a few options as well. But maybe before that, kita start first with understanding what does the company needs lah. So in terms of funding, when they want to raise the funds, some questions that the company should ask is, how much money do I actually need? So small funding dengan large funding, there are different routes to follow. So small funding can sometimes you can do through personal loans, that kind of stuff. Larger funding, of course, there's many options as well. But importantly to know how much money that you really need lah. So that's the quantum. Another question to ask is, how will you use the funds? So is it because you want to buy more stocks to sell? That is for inventory. Is it because you want to hire more manpower, more talent in your company? Is it because you want to actually spend on marketing so that you can reach a bigger audience and get more leads and increase sales? Or is it because you want to actually move to another different location so that you can actually have better access to the market, right? That's rather how the funds will be used. Another question to ask is, how soon do I need the money, right? So of course, financing is not something that happens just like that lah. Not a click of a button. So some funding will take some time, especially when if it needs to go through several layers of approval, then you will need some time. And sometimes the bigger the quantum is, also it might also require more time lah. And at the same time, it's also good to ask, what is my repayment capacity? So based on the business that we are running, right, look at how much of cash flow that you are generating currently, which is free cash flow, meaning is available for you to repay a loan in the event that you actually take out a loan. Importantly is to know that you are able to pay a certain amount there. So meaning, if every month you make some free cash flow, say 3,000, okay, but if you take out a loan, then you probably have to pay 5,000 per month. At least you know for that, inshallah, 3,000 will be set aside for loan repayment. But of course, when you do get a loan, you'll be using it to actually increase your business, and you should be able to have an increase in free cash flow every month as well. So that 3,000 can become higher. So you can also pay a loan, inshallah, better lah. So this is something to consider as well. Another question to ask is, because funding is varied, so am I willing to actually give up control of the business? So sometimes when you actually take up funding, you might actually have to give up some ownership of the company. Especially if it's not a bank loan, not a typical bank loan, right? There will be some equity which you need to give up.
Is it like collateral?
Not collateral. Collateral is more on you give a collateral against the loan. So in the case of a default or anything, it is actually against that form of collateral lah. It could be shares, it could be something. But if you actually get an equity funding, someone who brings in, say, a certain big amount, and they say, I will take 30% of your capital. So your question would be, how much am I ready to give up today? So I think it's important not to go into a situation where you haven't thought about this before you actually ask for funding, because when you ask for funding without thinking about these questions, you come in unprepared. So anything that you are being short at, you might just accept it and later regret it. So something to consider here.
Yeah. It's also to safeguard before something bad actually happen after you take up those loans lah.
Correct.
Not really financing. Yeah. Okay. So other than just normal loans, is there any other funding options that business owner can take? Yeah, they can consider taking other than loan.
Yep. Okay. So loans is the most, I would say the most popular lah. So I would say there's 3 different areas that you should consider. Number 1, I'll still go for the most traditional, which is actually a business loan. Okay. So a business loan is something that you can consider a bank loan from a bank for SMEs. Okay, it is very, very specific to SMEs. This is with in mind for companies where your business is quite stable. It's quite stable, but you want some a loan to boost it further. Credit worthiness is already
nice.
Yeah, it's already good. I mean, your numbers are okay. You can get lower interest rate as well from the bank because your business is basically stable. You are able to actually have a predictable repayment terms. Your money is basically not fluctuating so high up and down. However, there are some strict requirements, and the approval process maybe in Singapore, maybe 3 weeks or so. In Malaysia, it might take a bit longer, maybe a month or 2, right, thereabouts. Another way is for business loan is to actually look for online lenders. So in Singapore and Malaysia both, I think there are some non-bank agencies lah. So these are like what do you call this? I would say it's not a crowdfunding platform, but it's actually like association where they give out loans to businesses. So if you don't qualify for traditional bank loans, this is something that you can consider as well. So it's like a bank, but I would say it's a neo-bank lah. Neo-bank. It's not a real traditional bank. They operate online, but they can give you loans as well. They are regulated, so you also have some security that you're dealing with the right party lah. Right? Usually, they are a bit faster in giving approval. Their criteria is a bit more flexible. On the con side, they usually have higher interest rates. Yeah, high interest rates. And their repayment periods are not that long. So it's usually like 2 years or something, fully paid. Right?
Tenure.
The tenure. Correct, exactly. Aspect of business loan that you can consider is look for government grants or look for subsidized loans. So SMEs and startups, especially in certain areas, where especially when the government is trying to boost these areas, and you happen to be running a business in this particular area of interest, you'll be able to actually secure good funding from the government. Either they give you subsidized loans, maybe the interest rate, the bank interest rate is 9%, but they give you half of that. Yeah. Some banks, they have even special promotional rates for certain industries. So I know for a fact that last time Maybank Singapore, they have a 50% interest rate discount for professionals. So engineers, doctors, lawyers, accountants, they are able to secure funding at 50% rate. So it's actually, it helps a lot lah, right? If you were to actually qualify for like government grants because you are doing business in an area which they are very interested in, they want to push the country towards that direction, you might even get a outright grant. So there's no repayment required.
Oh,
No
got
interest.
such grant.
Yes, actually there's Singapore and Malaysia both. You just have to apply for it as long as it's something which is within the ambit of that particular plan that they have, then you should be able to get it as well. Yeah. This is business loan. Okay, but there's 3 options lah. So just to recap, bank loans, SME loan, right? Online alternative loans, like from the neobanks, right? And also government grants or subsidized loans. This is the first part lah.
I see.
Yeah.
Quite
for
an
me,
option.
right?
Yeah.
So it's okay, right? It makes sense. It's very traditional. I think that's what normally people will go for. Maybe I go to the second one.
Yeah. Okay.
This one is a bit more, I would say a bit more scary a little bit, because this is under the area of equity financing. So this is where you actually give up some shares in your business lah. So this part also have three sub parts. The first one is angel investors. So angel investors is usually for businesses which are in the early stage of business. They just start up, and they don't just need capital. They also need some mentorship. They need someone to help them make sure that they're on the right path, they're getting the right things done. They don't waste time, with going into crazy bureaucracy or chasing up the hill when they don't know what's happening lah. So they need a proper guidance from a mentor. So usually they go for this thing called angel investor financing. And the good thing about it is there are such schemes available in Singapore and in Malaysia as well. You end up not having to repay the amount because it's not really a loan. They take ownership in your company, right? So maybe they ask you for 20%, 50% shares, but they help you to run the business properly, guide you, make sure you're running properly. And then, of course, the company makes money, then there'll be some dividends to them as well. So that's how they earn.
Does this mean they are part of the shareholder of the company?
Oh, yes, exactly.
Right?
Yes.
Yeah.
So depending on the percentage which they hold, they will definitely be shareholders in the company. So that is the angel investor part. Another option would be, I would say, venture capital funding, VC. So this is a bit different. This is actually for startups which have a high growth potential. So it's in the very niche area where the potential for that business to suddenly scale very fast is very, very high. There's a high possibility. So in this kind of VC funding, usually what happens is a lot of investors might come and then they come with big money. So there's a large capital access. And then they might all, have you watched this show called Shark Tank on TV?
No.
So, okay.
Yeah.
So it's something like Shark Tank. So usually there's a few investors, potential investors. You pitch your idea, they like your idea, they ask you for some ownership in the company as well. So meaning you still have to give up your shares. But the good thing is you can take one of them, or you can take 2 of them, or 3 of them, and they can't all be your shareholders.
Oh.
So it's similar to angel investors, but this one is
collective.
Yes. There's a higher chance of more people being involved. Yeah, correct. So, and this one actually, most of the time, right, you don't give up a small percentage of shares. You actually give up bigger. So like angel investor, you give up maybe like up to 30%. But for VC, you might give up 50%, 60%. You might just take a smaller share, but the business booms lah. Yeah, and of course, it's not just about the dividend that you can get from it later on. Most of the time, owner is usually still employed in the company. They're still being paid a salary as well, right? And of course, when the company scales up, it becomes very, very big. There's a good chance for it to be actually sold. And there is actually capital appreciation as well. So not only do you get dividends, but if you sell the company, you get real returns as well. Yeah.
Lot of money back to the owners lah.
Yep.
See.
The possibility is good lah. Yeah. The last one I have under equity financing is this thing called crowdfunding. So crowdfunding is basically for businesses where it's a very innovative business, meaning nobody has done it before. It's something very, very new, novel business in that sense. Or it's a business where the products and services are very consumer driven, meaning it is actually something where the exposure to the public is very, very high.
Oh, I see.
Okay, so an example of consumer driven product would be food industry, food industry as well, or like even last time, I mean, there are some bitcoins and all that, so there could be other forms of coins that you want to offer, other kinds of investment nature business. So the possibility of high public exposure is there. At the same time, your public consumers are the one who will drive your business forward very, very fast. So what happens is that in this case, you can raise funds without any debts, because crowdfunding is actually something that you get a lot of investors out there who pledge amounts to you. So they will mention that, for example, you can tell them, look, like I want to maybe get a certain amount in exchange for a certain product, for example, and you can lay it out. So there could be multiple entry options for them, and they can buy multiple numbers of each. So you could say,
Is it like something a tiering system, is it?
a tiering system. So when you offer this to crowdfunders, what happens is that you don't just say, I want 10,000, I want 30,000. No, you tell them, look, this is what I'm going to come up with. It's a new phone, blah, 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 this is everything. If you can fund this for me, I'm going to ask you for $1,000. Once the product is ready, I will deliver the phone to you. Okay? And then maybe a phone with an accessory, perhaps. Right? This is 1,300. Okay? But of course, when you actually launch the items, it will be more than that. Maybe it's $2,000. So those crowdfunders are actually funding you in advance for a lesser amount in that sense.
Okay.
So, but of course, if something goes wrong, you don't have to repay them back. Yeah. So they take the risk lah. So this one is, as a funder, I would say it's good, because usually the consumers, because the products are very consumer driven, because they like the product that you're trying to sell, that's why they will go and fund you.
They will find an area where the sale possibility will be high, is it?
Supposed to be high. At the same time, it is because they themselves like your product.
Oh, I see.
So they want to fund you. So, it's not like I want you to fund me, but you tell them, look, I'm going to come out with this thing.
Yeah.
And they say, hey, I want to fund you. Yeah. So it's a bit different, right? It's the other way around. Yeah. So in this case, you need to actually, because you need to show them this is what I'm going to do. So you need to actually do like marketing, you need to campaign. So you might have to spend money on marketing campaigns to tell everybody, this is what I'm coming up with. Are you interested to be a crowdfunder? Something like that. Yeah.
I see.
And success is not guaranteed. Doesn't mean you do all this guaranteed people will want to fund you. It's no guarantee. So sometimes you open up, say, maybe I target 300,000, but ultimately I only get 200,000. So what happens with the shortfall?
They're not going to lose much lah.
No, you say you target 300,000.
Okay.
Via crowdfunding, but you only get 200,000.
200,000.
So the 100,000 shortfall, how?
Isn't that part of the markup though?
Oh, no. No, that means a targeted amount. I want 300,000 funds. So 200,000 came from crowdfunding.
Okay.
The balance 100,000, I don't have. I didn't get crowdfunding. So how? What do I do?
What do I do?
Trick question, eh? No, it's not trick question. It basically means that since crowdfunding didn't give you the full 300, the balance 100, I have to take from bank loan or something else. The other options.
So first, sorry, this part I macam lost sikit
No problem. It's okay, Pampran.
I see.
So what I'm trying to say is this. We're talking about options. So crowdfunding is one of the options. So kalau crowdfunding give you 200,000.
If it doesn't work, there are other options.
Tak cukup.
Okay.
So the balance yang you tak cukup target you, the funds that you need, you pinjam ke bank loan. Faham tak?
Yeah.
You go to other options.
I see. So it's fine to not just depend on crowdfunding.
Yes, of course. So that's the point lah. So don't just depend on one funding type lah.
It's
So-
fine. It's fine for business owner to take different sources of funds, is it?
Yes,
It's something that is okay.
it's
to
usual.
do. Oh, it's usual.
Yeah. So importantly is to weigh the pros and cons lah.
Okay.
So these three, angel investors, venture capital, and crowdfunding, these three are under the equity financing part, right? So that leaves the last one, which is actually the internal financing,
Okay.
I would say. So we looked at traditional bank, we look at equity. Now, lastly, we look at our own internal financing. So here, I would say, is to relook at how you run business, to make sure that you're able to finance your business better. Okay, so I'm also going to give you three options as well. First and foremost is to do this thing called bootstrapping. Bootstrapping is a term used to describe reinvesting your profit into your business. So every month you make some profit, right?
Loading money lah. sort
You
of.
roll it back. So the next month you have make some profit, put it back. Don't go and take the money and say, okay, come, let's enjoy, go to Japan or something. No. So that money goes back.
Yeah, yeah.
You reinvest, keep reinvesting. So, but this will work only when the business is profitable. Okay. So the no good part about it is that because your profits can be smaller, so the funding is also smaller. If the profit is big, then you don't really need funding, right? In that sense,
Yeah, yeah.
you're very
Betul.
profitable, right?
Can just use your own.
Yeah. So because sometimes it can be small, so and then you reinvest also is a small amount. So what happens is the growth is slow lah.
And have to work hard every time.
Yes, you have to push and push and push lah. Exactly. Another option other than bootstrapping is to get better terms with suppliers. Okay, better terms with suppliers. Basically, you know, when you have a retail business, you have to actually purchase your inventory, purchase your stocks, right? And you have to pay for it, right, of course. And if you don't have a good credit terms with suppliers, what's going to happen is that before you can sell it to the public or to your customers, you already have to pay,
Yeah.
right? So your cost becomes real cash flow out. So this is something which, as a business owner, you should try to negotiate your credit terms such that you can sell first
Yeah.
and then you pay later lah. Yeah, that's a important thing. It doesn't matter if you're retail, in manufacturing, even in wholesale, the same thing applies. Right? Actually, by extension, even in a service business, it's also the same lah. If you collect late, you know, but every month you still have to pay the committed salaries, right? So it's good to have a good, what do you call this, receivables collection plan. Yeah, make sure that you can actually collect money first, or rather collect deposits, right? Another thing that you can do, number 3, is to actually do something like to help your invoices get financed. So this is called invoice financing. Not very popular.
Yeah, I never heard of it even.
Yeah, not very popular. But this is where businesses have very good customers. They always pay every month. But before the customers pay, you ask the bank to advance you the amount.
This podcast has been brought to you by Accounting Superhero, your trusted zero and SME compliance partner in Singapore and Malaysia. Switch up to Accounting Superhero today.
So you raise the invoice to a customer, right?
Okay.
Say the invoice is 10,000, and every month this customer will pay. Usually will pay. Very good customer. So before the customer pay the 10,000, you tell the bank, hey, this customer owe me 10,000. Can you give me 80% of this amount first?
Can such thing?
Can. So the bank gives you 8,000 first. Yeah. Okay. Then either the customer pays the bank full 10,000, and then later they'll pay us the 2,000, or depends on what the arrangement is lah. But usually the bank will then ask the customer to pay them directly.
The customer knows about the bank paying in advance of what they owe us.
Yes. This is called factoring, like, or invoice financing.
I see. This one might be the case where if a company really need fast cash,
Yes.
that's where they go to the bank first.
Agreed. So sometimes if you have given your customer, say, more than 30 days credit, 60 days, because certain industries are like that. maybe that's a 60-day credit, but the customer will pay within 60 days. But you need money within the 30 days, right? For example. So you tell the bank, please finance my invoice. The bank pays you first.
Yeah.
But usually it's not the full amount. It'll be a certain percentage lah. 70%, 80%.
Yeah, because companies also might have their own pay run cycle.
Yep.
So only at that date every month, only then they're able to pay.
Correct.
So probably this is where things are.
Correct. So the good thing about it is that you get the money fast. And as long as the bank have assessed your credit terms, your documentation all okay, everything is good. The customer is also has been assessed. They should be able to help. However, there are fees. So the banks usually charge like 10%, 12% of the invoice value. So you're paying quite a significant amount. Yeah. Right? So this is the part where it is not a long-term strategy. It's a short-term one.
Okay.
That means it's like maybe for the next 6 months, we'll do that first.
Oh, okay.
We need to get some money first. Then we can push our business a bit more. Then we can make more money. Then we can stop this. We can do something else.
This is not something common, is it?
It is common. It's just that not very popular.
Not very popular. Only those who knows will go this
Correct.
approach. Okay.
So I think these are the 3 areas, types of financing that a company can actually get. And within each of them, I give you some examples lah. Yeah.
Can. Right. So, you've shared like I think 9 approaches just now with 3 different categories of financing that business owners can get. So, as an accountant yourself, right? Is there any practical advice that you want to give to business owner in choosing the right funding option based on what they really need or based on how their business is doing?
Good question. Let's just say this lah. Sometimes you find yourself as a business owner in a situation where banks keep calling you, asking you, hey, you want to take a bank loan? You want to take a loan? You want to take a loan? Or hey, you qualify for this amount? Would you want to take it up? That kind of stuff. Or for example, the government of the day actually mentions, hey, look, SMEs, you all are, you should be qualifying for a certain grant or a certain subsidized loan. If you want to go and take for it, that kind of thing, then you feel a bit pressured, like should I take, should I not take, right? So I would say, most importantly, before you take any money, you plan on which option works best for you. Okay, think about borrowing what you need. Don't borrow what you can.
Oh, yeah.
So maybe
that's important.
maybe your figures are good. You're a very good business, right? The bank can give you 1 million, but maybe what I need is just 200,000.
Yeah.
So then just borrow what you need. Don't over borrow lah.
Don't be too rushy in deciding.
Yeah. Don't be too aggressive, I would say.
Because
Yeah. Because you take the full 1 million, just remember that there is an interest element to repay, right?
afraid lah.
Yeah.
I heard 1 million also. That's a big amount.
Scary bit, right? Yeah. So then number 2, I would say is think about how it affects you over the long term lah. So things like anything within 3 years, is still I would say short term. But bank loans especially can stretch 5 years, can stretch 6 years, So this gives you pressure over a longer period of time. So you feel, oh my God, I have to pay.
I have to maintain being profitable.
Yes. Of course, we all want to be profitable.
Yeah.
But at the same time, you have that pressure on you lah.
Yeah.
Form, no? But that's bank loan. The more scary one is equity finance.
Yeah.
So equity finance means someone already invest in you and take your shares, So they are not going to get interest from you. They are going to get profit from you, right?
Wow. You feel double the responsibility.
Yes. So I mean, I have friends, who are in businesses where they have venture capitalists, they have all these equity based financing, and what they can tell me is that over the next 3 years, they really have to perform like crazy. So that means you put everything in, all in. No sleep, stress. You literally feel someone sitting on your back, pushing you. So that's something that you have to be okay with, lah. Right? Another thing I would say is to understand the full cost of capital. Cost of capital, one of it is interest. Okay, that one we all know, right? Then another one is actually bank fees. Bank fees is another one of them. But at the same time, the dilution of your ownership, like for example, when you have an equity-based funding, someone takes 30% of your shares, right? That is also a cost of your capital, right? Because you lost some ownership there,
Yeah.
right? And when you take a government grant, for example, they also will have certain requirements. Like maybe after 1 year, you should show some improvement in your numbers and everything. So there are some compliance requirements, certain things that you need to do. So these are, I would say, these are also costs of getting that capital, not just about interest, Other than this, think about the repayment before taking the loan. Meaning, if in the event something happens, if you are unable to generate more money, can you still pay or not the loan installment?
This is the free cash you talked about earlier.
It's the bank loan.
The bank loan.
So if you were to take a bank loan, right, every month you have to pay an installment, right? So in the event something happens, okay, and we can't generate more money, more free cash flow, are we still able to pay or not? So that's something that you should ask yourself first. So don't take too big a quantum, so the installment doesn't become too big as well.
Yeah.
Right? And I think last but not least, I would say my advice would be, before you consider I gave 3 categories of options, and there's a few options under each of them. Go for the easiest one first, or rather the ones like give you the best deal. So for example, I would say government always give the best deal to SMEs, because they want SMEs to always be able to sustain themselves, right? Because a lot of people are working in SMEs, right? So they might be giving low interest loans, subsidized loans, grants, and all these. Take all of this first, okay? Then go for normal bank loans, because normal bank loans is interest only, right? Basically, that's about it. Then you can go into equity and other stuff lah. Yeah. So rank it lah. So that would be my advice lah, madam.
See, can. So from what you've shared earlier, yeah, like there are 3 categorization of how businesses can support funding. Like you mentioned about loans, equity funding, and the other one was a self-funding sort of thing. So it's not really about loans all along. There are other options of financing, and also some weighing factor to determine which one is best for business owner to take lah. So of course, I think you have also experienced or probably witnessed a situation where funding falls into a life of a business owner, or probably our own clients themselves. So is there like any story that probably you can share with us for us to just get a touch on how this thing affects in real life?
Ken, actually, this is one of the most exciting things that I can share with you today.
Story time.
Okay, story time. So I think I have more than one story today, but I hope you have some time.
You can.
Can I? Okay. So first story I want to share is about this is quite a recent case lah. Actually, yeah, I've got more than 2 lah actually. Okay, never mind. I'll tell you one by one.
Yeah. Okay.
Okay. So the first one is this. There was a call I received lah. I think it was like almost midnight. Okay, and then one of my clients called and said, "Look, I need to talk to you because I just received information that one of my rented units is actually being sold."
Okay.
Okay, and the landlord, one of the landlords called me lah to tell me, because that person was quite okay with this client. So that landlord actually tell the client, "Look, most likely after this unit is sold, you will lose the place, because the person who actually wants to buy over the place is doing the same business as you."
Okay.
How does it sound?
Like being silent.
Huh?
Yeah. So.
True. It's the end of the road.
Yeah.
Right?
Exactly the same business some more.
Same business. So that means the moment the sale and purchase goes through, the new owner will definitely cancel the rental, kick them out, and take over the place, another business.
Did they get a heads up about this?
So this was the one of the owners, or one of the landlords Because that landlord happened to be nice to this client, so inform the client lah. Yeah. So because that particular unit was owned by two persons lah. So one of them actually decided to let her know.
Oh,
Yeah.
okay.
So then she asked me, how? What am I going to do if really, this thing goes through? I'm dead. Business show close one. And it's true. She just renovated that place maybe 1.5 years ago. An amount of, I think, close to 150,000. Yeah. So panic lah.
Yeah.
So panic like crazy. So then actually for that client, we are not handling much things for them. We only handle like maybe a yearly, some yearly work for them now. So I think I just told her, look, just relax. Let me look at your numbers again, and then let me check with my bankers, see what can be done. So then she told me, what you want to do in the banks? Like, how can the banks help?
Yeah.
The owners are selling the place, right? I said, what I think you should do is get a bank to look at your numbers and the property in question and see if you can buy it instead.
Good.
So, long story short, fast forward 2 weeks later, she secured the place and took the keys. So that whole entire thing was prevented lah.
The landlord is agreeable with her buying instead of that other person.
Yes. This just, you know why? Because after I contacted the banks, then they checked everything. They said, okay, we can support how much, everything. Then if there's a shortfall, we can give you a bridging loan some more, just in case. So everything all standby already. Then she went to go and see the landlord and say, look, how much you want to sell this place lah? So yeah, we already signed option to purchase this amount. I said, can you break it? I will offer you 10,000 more, 20,000 more. Something.
Higher offer.
And she can do it. She can do it because she knows how much of support she has from the bank, right?
Yes.
So with full confidence, okay, this is how much I can buy. Would you want to consider? So okay, let's do it.
She signed up everything with the bank before telling the landlord.
No, she didn't sign up. Just get the bank's in principle approval.
I see.
So because of that, the apocalypse was prevented.
Nice,
Amazing, eh?
Yeah.
Alhamdulillah, good for her. You ready for second one?
Yes.
So this other client, what happened was they have been operating from just one location for a very, very long time, for 20 years. One location, good business, everything, predictable profits and all that, but not much profits. So very modest in numbers and all that, but it's a very solid business. So what happened was, of course, when this client is also inside the Masters of the Deep, right? So they told me, look, I want to grow bigger and all these kind of things. But I said, in order for you to do all these things, you need to stand by some finances, right? Then you can do all this. So, but they said, no, I don't want to take on loans because all of this will be interest, right? And they don't want to take on interest, which is understandable, acceptable. So ultimately, there were a few offers to buy over other businesses, okay, of the same nature. So instead of you taking up an empty unit and then start from fresh and everything, right? There are some people who want to sell off the business, and the business is running, and same industry, everything. So you just pay a certain amount, you take over the business.
Take over the business or the place?
Take over the place and the business, everything.
Okay.
Yeah. So, but of course you need money, right?
Yeah.
And it needs to be like very, very fast. So in this situation, I told them I come, call my bankers, come sit down, see what you can do for this person. They look at the bank accounts, everything, do an assessment. Within 1 week, they were offered a very big amount. Very, very big amount. They probably wanted only 1/4 of that amount. Okay, but they were offered the full 4 times what they expected.
This is the loan offer.
The loan offer. Yeah. Okay, it's a clean working capital loan, but with that, they were able to actually take over 2 different businesses. Yeah,
If
suddenly
it's
from
4 times.
yes, so suddenly from one place now they expanded to 1 plus 2 more, and they open up another one of their own. Yeah, so they grew very, very fast in that sense, But of course, to do all these things, you need to be ready, You need to be ready. You need to have a good financial plan on how you're gonna repay this, right? Not just take only then later see how. Cannot later see how Must have a good plan.
And the numbers itself lah.
Yep. Must make sense.
Yeah.
Yeah.
I see.
So I've given you 2 happy stories, right?
Yeah.
So I'll give you one scary story.
Okay, the third one is scary. Okay.
Okay, so this is a very old story lah. What happened was there was a client who they wanted to look for private investors. They don't want to take bank loans again because of interest and everything. So they keep telling me, no, fast. I just want to take private investor. So then the amount they were taking quite big, 50,000, 100,000, and not just one person, like multiple people lah. So easily 1 year they can already rake up like 500,000, 800,000 worth of investment lah, and then they will pay back dividends lah. In that sense, it's basically it's a profit share lah, right? So the scary part is what happened was there was this one investor who invested with them quite a big amount. So they put up maybe like 300,000 or something. But suddenly that investor, I think her husband or her mother, something like that, important family member, was struck with cancer. And then she had to cover medical bills and everything lah. So at that point in time, because of all the stress and everything, right? She didn't remember that this was an investment. Okay, suddenly she just think of it as there was a loan.
Yeah.
Then she asked for the whole amount back. Yeah. So overnight, she called the client, practice client of mine, and said, "Look, I want you to repay me back like 300,000 on all one shot."
This is investor POV lah. So just now we case.
Yeah. So the client, how to pay the 300,000? It's a lot, right? Yeah. Because of course, from the investor point of view, it's a necessity, right? Something unexpected happened, but at the same time, this shouldn't be the case lah. Because it was an investment, not a loan, right? But the bad part, the scary part was when the client couldn't pay the amount. So what happened is the investor actually went to social media and a lot of stories came out, defamed the client, accused them of fraud. Whole big mess came up lah. So why I bring up this story is because from the SME point of view, when you want to actually look for funds lah, consider all these other things that can happen as well. Is your investor a savvy investor or not? Someone who knows what they're doing. Meaning, are they someone who can give you, say, this is the amount I'm going to invest in you, I will forget about it. You just give me a dividend or a profit or something. Or are they someone who, I don't have extra, but I'm going to give you this. I hope you can give me some profit. Yeah.
Should be they got something extra lah.
Yes, they have others. So, simply put, right, as an investor point of view, you have 1 million set aside cash. You invest everywhere else 200,000, 300,000. That's it.
Yeah.
The balance you still keep.
Don't do everything.
Yes. So if something happens, you lose the money. Okay, that's business. Forget about it. Okay, you still have funds to fall back on. But if the investor is not like that, not in that level yet, then don't invest lah.
I see.
Yeah.
Okay.
So that's a scary story. Can you imagine what went through the client's mind? Social media everywhere saying, she's a fraud lah, he's a fraud lah.
When their expectation, I mean, if they were to get back the money, it will be within a span of time where they already work on the money and there are returns. That happened fast, is it?
Yes.
I see.
Yeah. So they probably invested like say 1 year ago, and then of course the money will have been used, right?
Yeah.
Right.
It might already be somewhere else to be used.
Like it's in the business, it's being used in the business already, right? To generate more money, right?
Yeah.
But then when you suddenly ask for the whole amount back,
it's hard for the business owner also.
yes.
And then everything goes on social media about.
Yes. That your fraudster lah. That scary, man.
Yeah.
So that's a scary story I wanted to share with you.
So it's really important to determine which option is the best for you lah, right?
Yep.
And I think talking about the third story, there need to be something written of
Agreements.
an agreement need to be
Yes.
done also lah. So
Exactly.
that if anything were to happen, everything should be referred to the agreement lah.
Yep.
I see.
Okay. But of course, that won't stop them from going on social media and trying to kill you lah.
Yeah, that's sad. See, can. Alright, so yeah, thank you, Mr. Faz. I've learned a lot today. Yeah, it's actually a new thing for me to know about the equity investment specifically, because the bank loans and the private the self investment is something that it's common lah.
Yep.
It's just the equity.
Most companies will do
Yeah.
lah.
Can. So thank you, Mr. Faz, for
Most
today.
welcome. Right.
Yep.
Have a good day ahead, brother.
Thank you. So, do you enjoy this episode? If you do, please feel free to check out our bonus freebies in our Faz The Accountant website. In the next episode, we'll uncover another interesting topic: handling employee misbehavior and disciplinary issues. How do you, as business owner, tackle this situation? See you on the next episode.